Let's bring in James Demmert, Main Street Research Chief Investment Officer. He has $2 billion in assets under management. James, it's great to have you on. I'm looking at your notes here. You're bullish. You're bullish going into 2024. Why?
Happy holidays, Morgan. And we are very bullish about going into the year and even over the next maybe 6 to 10 years as we envision a new super cycle sort of led by AI tech, if you will. And I think that here specifically, investors need to remember, what does a new bull market look like? And if you really go back and look at history, you'll see oftentimes new bull markets sort of start like this one has, a little narrow, then it starts to broaden out as we saw last quarter. And when it gets to these extremes, these heights, oftentimes investors get scared and they think, oh, it's gone up too much, maybe I'll stop investing. And that would be a mistake in our view. We think that investors still have a lot of capital outside of the market from the bear that occurred. And we think January effect, if you remember that one, Morgan, is going to come into play as we get to the beginning of the year. And that's usually where the market broadens out even more, goes up even more than people expect, and even brings the small cap stocks, obviously, which have been challenged. So we think that trading range that small stocks and the rest of the market have been in breaks out in January as money flows back into the market.
Of course, the small caps, the Russell 2000, ending the day down about 1/3%. But in general, as of late, have had a pretty strong rally. I do want to get back to your comments, James, about this AI-led bull market. But first, let's expand the conversation. Let's bring in Paul Hickey, co-founder of Bespoke. Paul, the fact that we're on record watch here for the broader market, for the S&P 500, assuming we hit that at some point here in the coming days, how meaningful is it to rack up a new all-time high for the S&P versus what equities do from that point on?
Yeah, so hey, Morgan, when you look at these periods when we go a long time without, it's been nearly 2 years without a new high, forward returns for the market have been positive 12 out of 13 times in the post-World War II period. So, we talk about being at near record highs right now and how we've had the best November, December in a very long time, and it's been a very strong year for stocks. But at the same time, the market has gone nowhere in the last 2 years. The S&P's flat, and the Russell 2000, as James was just talking about, has been weaker, and it's been stuck in a range with 2000 was the ceiling. We've just started to break out of that range recently. And the key here, I think, is for the broadening out of the market theory is the loosening of financial conditions, lower interest rates. Interest rates are still at restrictive levels, but it's the direction that's most important, and they're going down. So I think in that respect, when you look at these prior periods where you've seen this loosening of conditions and such, the market overall has done well, but just as importantly, small caps have done very well as well. And you may look at and say, oh, well, small caps have had this monster run in the last 2 months. But when we've looked back at prior periods, when you see a strong run in the Russell 2000 over a 2-month period, it's generally been a precursor to further above average gains.
Okay. James, I want to pick up on something that Paul just touched on, and that is the broadening of this rally and what that means amid loosening financial conditions. We've got a Delivering Alpha survey that was conducted, and one of the questions that was asked here is, which will be the top performing areas in the U.S. in 2024? And among all the different sectors that were put forth to investors who took the survey, 35%, so the majority in this survey, said financial stocks will be the top performing sector. Do you see it the same way?
I like that survey, and I appreciate you bringing it up. I think that where the best relative earnings growth is going to be in 2024 is where you want to be as an investor. And I would suggest that financials, absolutely. The valuations are almost historically cheap, as our small caps. But the financials, absolutely, I would be in there. I also think, you cannot ignore the fact that it is an AI tech-led new business cycle, new bull market. You've got to be in those tech companies. Even if the valuations seem expensive, the growth is there to justify it. So, yeah, we would go with big tech, AI, financials. I have to agree with consensus, which I usually don't. but yeah, and I would suggest definitely the small stocks as well and the industrials.